Hello, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to this BCI podcast number 137 titled, Can Price Movement Be Explained by Profit Taking? And we're going to be using a real-life example with Global X Fund's Infrastructure Development, which trades on the BATS exchange under the ticker PAVE. So, let's talk first about some of the causes of share price decline. Of course, number one on that list would be disappointing earnings reports. And ladies and gentlemen, that is the reason why in the BCI methodology, we always avoid selling options if there's an upcoming earnings report prior to contract expiration. That's one of the very critical rules in the BCI methodology and one of the main reasons for share price decline. Now, another reason would be that the overall market is declining. I mean, look what happened in 2008 during the crash, what happened in 2020 when COVID-19 hit. So those are examples of when the whole market went down, thereby pulling down a very large majority of the stocks in the exchanges. So a third reason would be that there's some kind of unexpected negative news that comes out. So we already know that we're going to avoid the news of a disappointing earnings report because we avoid those. But from time to time, unexpectedly, some bad news will come out that will have a negative impact on the price of the underlying securities. Now, another reason why price might whipsaw down is that by the very nature of the security, the implied volatility is very high, and therefore we can anticipate the price of that stock going up dramatically, going down dramatically. I mean, that is the very definition of a high implied volatility security. So it just might be the nature of the underlying security. And the question is, how about profit taking? Well, if profit taking takes place after the price of the stock goes up significantly, we can certainly understand that that would also be one of the causes of share price decline. Now let's move on to a real-life example with PAVE. On April 5th, 21, PAVE was trading at 25.53. And the April 16th, about 5 weeks out, 27 call was sold at 15 cents. So not a big deal return, but it's better than nothing. In this particular case, when we sell the out of the money 27 call on a security trading at 25.53, we're giving it a lot of room to move to the upside. Well, on April 6th to April 7th of 21, the stock price did drop to 24.81, and then lo and behold, it recovers up to 25.11. So let's have a look at a 3-month price chart of PAVE and see if we can make some sense of this. Now, for those of you also watching this podcast, you're now seeing a chart, a 3-month chart. For those of you who are just listening to the podcast, I will describe it to you to the best of my ability. Now, on the chart, there is a red arrow showing the price of PAVE moving up significantly and then breaking through resistance. And that happened towards the beginning of March of 2021. Right after it broke through resistance, a very bullish price movement, boom, the price of the stock immediately went down significantly, and it went down to support. And on the chart, for those of you watching this podcast, that's by the blue arrow in the middle of the screenshot. Then what happens? PAVE starts moving back up again. There's that implied volatility whipsawing up and down. So the price of PAVE went all the way up, this time not exactly through resistance, but pretty much up to it and almost beyond. And that's by the green arrow for those of you also watching this podcast. What happens when it hit resistance? Boom, the price of PAVE went down again. And at the very right side of the price chart, PAVE is kind of in consolidation, moving sideways, perhaps a bit up at the very far right of the chart. So we see a breakout above resistance, then the price drops. And then we see a price recovery up to resistance, and then the price drops again. So is it the implied volatility? Is it profit taking? Was it the market that caused it? It's not an earnings report because we wouldn't have written a covered call. So at this point in time, it's really hard to say. So let's do an analysis. It is possible that profit taking played a role in share price decline because it seemed to happen each time the price of the stock went up. Whipsaws, though, for a security like PAVE, which has a very high implied volatility, is actually somewhat predictable. So when we use that underlying, we can anticipate whipsaws in the price. And not little tiny ones. Usually, because of the high implied volatility, they could be significant, particularly compared to the price of the stock. And in the case of PAVE, the implied volatility at the time that I created this podcast was more than double that of the S&P 500. Now, there's nothing wrong with using a higher implied volatility security as long as it aligns with our personal risk tolerance, but it will help us understand why we have these whipsaws significantly up, significantly down. Now, the key point here is that this shows you why BCI implemented the 20%, 10% guidelines, which you institute immediately after entering a covered call trade, because it guides us as to when to close the short call, depending on which part of the contract we're in. So rather than trying to figure out why, which, as I say in the screenshot, can be quite challenging, we can determine when to take action, which is much more important, because we may not know for sure why there was that particular price decline. So just to kind of sum things up, PAVE closed on April 9th at 25.35, which was very close to the trade break-even price point of 25.38. Now, there's still a little time to expiration, and the final results really can go either way. So what do we do as of April 9th when we were very close to our break-even price point? Well, ladies and gentlemen, this is an example of the best action to take at that point in time was no action at all. Ladies and gentlemen, every time I complete a BCI podcast, I direct you to our best and most comprehensive investment package, the BCI package. It has 18 components to it, 6 online video courses, 6 calculators created by the blue-collar investor and found nowhere else, 5 of our best-selling books, both covered call writing and selling cash secured puts in ebook format, and our 13-month premium membership, which contains over 200 components in and of itself, which includes hundreds of online training videos. Now, to access the BCI package at a 25% discount, just go to our website, www.thebluecollarinvestor.com, and click on the link at the top that says BCI package for more information, including a video presentation of this package. To get items individually, just go to our website, thebluecollarinvestor.com/store, and you have online video courses, ebooks, hard and soft covered books, calculators and spreadsheets, online mentoring, and much more. So, ladies and gentlemen, there goes BCI podcast number 137. Can price movement be explained by profit taking? Folks, I hope you enjoyed this presentation, and most importantly, I hope it puts some cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.